I think that in the case of China, let's say in a balanced fund portfolio, in a global balanced fund portfolio, we are somewhere around neutral. We have a neutral weighting in the Chinese stock market, because within the Chinese stock market, there are always some great growth stocks, in the consumer area, in the internet area, in the online education area, and some industrials companies also can do quite well as well. So I think that it is very much a matter of stock selection rather than a big call on the market itself, because the market itself, as we all know, actually has been trading within some kind of a trading range in the short term, whereas the U.S. stock market, with the hope that the Fed will deliver a number of rate cuts, has actually made all-time highs. So we're talking about very different momentum markets.
So let's broaden out the conversation and talk about that potential Fed move. Khiem Do, what happens to your strategy in China and broad Asia if the Fed undershoots expectations and doesn't cut rates as much as the market expects? Yeah,
I think that the market is divided between 25 to 50 basis point rate cut next week. From our viewpoint, we think that the U.S. economy actually is quite strong, and therefore it doesn't really need a 50 basis point rate cut. But if it were to occur, then that is mainly for insurance purposes rather than, there is a real need for that. So we go for a 25 basis points rate cut. So if that were to happen, would the market be unhappy? I don't think so, because the market will continue to think that perhaps in the next 6 months there will be further rate cuts. So it's only until the Fed announces that they are back to neutral now and they are not on the easing path anymore. So if they were to say that, then obviously the market will be very disappointed. But if they were to say that, yes, we are watching the data, and if the data is continuing to be weak, we will continue to be on the easing path. And if they say that, the markets will be happy, we think.
So all things considered, though, when you look around the world, are US equities still your most preferable play?
Yes. In our balanced portfolio, once again, we are overweight in the US and Europe for the moment. And as I said, for other countries, we are somewhere either underweight or, in the case of China, in the neutral camp.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.